Breaking news just dropped, and this one is different. An American aircraft carrier, the USS Abraham Lincoln, may have just been struck by Iranian missiles, not a destroyer, not a supply ship, a full aircraft carrier, the most powerful symbol of American naval dominance, reportedly hit. And here's what nobody's telling you right now. This isn't just a military story. Qatar just went dark on gas production. Global energy markets are already shaking. Kim Jong Un just issued a war warning. Russia is quietly moving toward Iranian nuclear sites. And Washington? Washington is scrambling for $50 billion that it may already be too late to spend. One strike changed everything. And what happens in the next 48 hours could reshape every alliance, every energy market, and every safe haven asset on the planet. Stay with me, because this is only the beginning. Welcome to Currency Archive. Now, before we go any further, I want to ask you something, and I mean this respectfully, the way you'd ask a wise elder sitting across the table. Have you ever seen a moment in history where everything changed overnight, and most people didn't even notice until it was too late? That's exactly where we are right now. If you're new here, and you're someone who's lived long enough to know that the world doesn't always give you a second warning, hit that subscribe button. This channel is built for people who want to see what's coming before it arrives. And while you're at it, drop a comment below and tell us, where in the world are you watching this from tonight? Because, trust me, where you are on this map matters more than ever right now. The world woke up to a report that nobody was prepared for. Deep in the waters of the region, one of the most powerful warships ever built, the USS Abraham Lincoln, had reportedly come under missile fire. The weapons, according to early intelligence assessments, were linked to Iran's Islamic Revolutionary Guard Corps, better known as the IRGC. For decades, military analysts had warned that a confrontation of this scale was possible, but when the reports began to surface, even the most seasoned observers paused. This was not a small patrol boat. This was not a supply vessel. This was an aircraft carrier. The USS Abraham Lincoln is not simply a ship. It is a floating military city. It carries dozens of combat aircraft, thousands of personnel, and represents one of the clearest symbols of American military power that exists anywhere on the planet. When nations want to send a message of strength, they send a carrier strike group. When the United States wants the world to know it is serious, the Abraham Lincoln is the kind of vessel that gets deployed. So when reports emerged that IRGC naval forces had targeted it with missiles, the significance was immediately understood in every capital city that matters. For years, the IRGC Navy had been quietly developing its capabilities. While Western analysts often focused on Iran's ballistic missile program, a parallel transformation was taking place at sea. Iran invested heavily in fast attack craft, drone boats, anti-ship missiles, and coastal defense systems. They studied the geography of the Persian Gulf and the surrounding waters with extraordinary precision. They understood that in a confined maritime theater, a smaller but highly mobile force could create serious problems for even the most advanced naval power in the world. The IRGC did not try to match the United States ship for ship. That was never the strategy. Instead, they built a force designed to swarm, to harass, to target weak points, and to strike fast before a response could be organized. Military experts have described this approach as asymmetric naval warfare, and on paper, it had always looked dangerous. Now, the world was seeing what it looked like in practice. What made the Abraham Lincoln report even more alarming was that it did not come without warning. In the days before, Tehran had already claimed that Iranian forces struck a U.S. destroyer operating in the Indian Ocean. At the time, some dismissed the claim as propaganda. Others took it seriously, but hoped it would remain an isolated incident. It was not isolated. It was the first move in a sequence. The destroyer attack was linked to a broader military campaign known as Operation Big Wave, a coalition effort involving the United States and several allied nations, designed to project power and enforce strategic pressure across key maritime corridors. Iran had been watching the campaign, and rather than pulling back, Tehran made the calculation to push forward. The shift from targeting a destroyer to targeting an aircraft carrier, if confirmed, represents a dramatic escalation in that calculation. Within hours of the report's surfacing, financial markets began to react, not with panic, not yet, but with the quiet, calculated movement that experienced observers recognize immediately. Safe haven assets began to attract attention. Energy prices shifted. Shipping insurance rates in the region started climbing. Traders who had been watching the situation began adjusting their positions. This is how major geopolitical shocks move through the global economy. They do not always arrive with a crash. Sometimes they arrive as a tremor, a subtle but unmistakable signal that something fundamental has changed. The Abraham Lincoln reports were that tremor. And for anyone paying close attention to the intersection of military, while the world was still processing the reports from the sea, something equally significant was happening on land, inside the meeting rooms, foreign ministries, and diplomatic corridors of Europe. And it was not what Washington expected. Denmark spoke first, then France, then Italy. One by one, 3 of America's closest European allies stepped forward and did something that would have been almost unthinkable just months earlier. They publicly criticized the coalition's actions. Their officials accused Israel of violating Iranian sovereignty. They did not whisper these concerns behind closed doors. They said it openly, on the record, for the entire world to hear. In the language of global diplomacy, that is not a disagreement. That is a rupture. When allies stop being allies. To understand why this matters, one must understand what alliances actually represent in the modern world. They are not simply military agreements. They are economic partnerships, intelligence sharing arrangements, and, perhaps most importantly, signals of collective resolve. When an alliance holds together, it tells adversaries that the cost of confrontation is multiplied. When it begins to fracture, it tells those same adversaries something very different. It tells them that the window may be opening. Europe's public dissent sent a message that no military press conference could undo. It told Tehran, Moscow, and Pyongyang that the coalition standing against them was not as unified as it appeared on paper. And in geopolitical terms, perceived weakness and actual weakness often produce the same result. History has shown this pattern repeatedly. The moments before major global conflicts escalate are rarely defined by military events alone. They are defined by the collapse of diplomatic consensus, by the moment when allies begin calculating their own interests more carefully than their shared commitments. That moment had arrived. The man in Pyongyang makes his move. On the other side of the world, in a country that most people had not yet connected to this conflict, Kim Jong Un was watching. North Korea's relationship with Iran is not new. The two nations have maintained quiet channels of cooperation for decades, sharing technology, exchanging intelligence, and finding common cause in their shared adversarial relationship with the United States. What was new was Kim's decision to make his position public. His warning was specific. If North Korean citizens present in the region were harmed as a result of the ongoing conflict, Pyongyang would consider entering the confrontation directly. It was a carefully worded statement, not a declaration of war, but something designed to land with weight. And it did. The significance was not simply military. North Korea's entry into any conflict, even indirectly, would transform the strategic calculus for every nation involved. It would stretch American military attention across multiple theaters simultaneously. It would force South Korea and Japan, both critical U.S. allies, to redirect their focus. It would give Iran a psychological boost at precisely the moment it needed one most. Kim Jong Un understood all of this. That is exactly why he said what he said when he said it. Iran's most dangerous warning. But it was Tehran's own statement that carried the sharpest edge. Iranian officials issued a direct warning, one that crossed a threshold that few had anticipated. If any attempt was made to pursue regime change in Iran, they would strike critical Israeli infrastructure, and they named a specific target: Dimona. The Dimona nuclear facility in southern Israel is one of the most sensitive and strategically significant sites in the entire Middle East. It is widely understood to be the center of Israel's nuclear program, a program that Israel has never officially confirmed but has never denied. Striking Dimona would not simply be a military attack. It would be an act with consequences that no government anywhere in the world could fully predict or control. The fact that Iran named it openly was itself the message. What economics already knew, even as diplomats struggled to process these developments, financial markets were quietly drawing their own conclusions. Commodity traders began pricing in scenarios that policymakers were still refusing to discuss publicly, because fracture lines in alliances do not stay invisible for long. And when they become visible to markets, to the people who move real capital across real borders, the consequences arrive faster than any government can manage. The tremor from part one was becoming something larger. The ground beneath the global economy was beginning to shift. There's a moment in every major geopolitical crisis when the conflict stops being just a military story. It becomes a money story. That moment had arrived. While generals were assessing damage reports and diplomats were exchanging carefully worded statements, something far quieter and far more consequential was already happening inside the global economy. Supply chains were recalculating. Energy desks at major trading firms were running new scenarios. And one small nation, sitting on some of the largest natural gas reserves on the planet, had just made a decision that sent a cold signal through every energy market in the world. Qatar had halted gas production. The gas tap turns off. To understand what Qatar's decision meant, one must first understand what Qatar is in the architecture of global energy. Qatar is not a large country by land or population, but it punches far above its weight in one of the most critical commodities on Earth: liquefied natural gas, or LNG. Europe, Asia, and dozens of other economies depend on Qatari gas exports to keep factories running, homes heated, and power grids stable. When Qatar moves, the entire global energy market feels it, and Qatar had just stopped moving. The halt in gas production was not framed as a political statement. It was presented as a security measure, a precaution given the instability spreading across the region. But markets do not separate security decisions from economic consequences. They simply price in the outcome. Energy prices began climbing, not sharply, not yet, but with a steady, deliberate movement that signals a structural shift rather than a temporary spike. Shipping routes were being reassessed, long-term supply contracts were suddenly looking fragile, and importing nations that had built their energy security on the assumption of stable Qatari supply were quietly beginning to panic. Washington's $50 billion problem. At the same moment, Qatar's production lines went quiet. A different kind of financial shock was emerging inside the United States government. The Pentagon had submitted an emergency funding request. The number attached to that request was not small. $50 billion, tied directly to the ongoing military operations in the region, was now sitting in front of a Congress that was already deeply divided about whether those operations should continue at all. This created a paralysis that no military strategist had fully accounted for. On one side, the Pentagon was arguing that without emergency funding, operational capacity would begin to degrade. Supply lines, munitions reserves, and logistical infrastructure all require continuous financial support. A carrier strike group does not run on resolve alone. It runs on fuel, parts, personnel, and a budget that has to be approved by elected officials who answer to voters. Voters who were increasingly uneasy about where this conflict was heading. On the other side, a growing congressional faction was pushing in the opposite direction entirely, not just resisting the funding request, but actively working to block any new military strikes. The argument was simple and politically powerful. No more escalation without a formal debate. No more billions spent without accountability. The result was a government caught between military necessity and political reality. And that gap, that dangerous space between what the Pentagon needed and what Congress was willing to approve, was being watched very carefully by every adversary involved in this conflict. Russia's quiet calculation. While Washington argued with itself, Moscow was moving. Russia's positioning near Iranian nuclear facilities was not accidental, and it was not purely defensive. It was a calculated strategic play, one that served multiple Russian interests simultaneously. By placing itself in proximity to Iran's most sensitive nuclear infrastructure, Russia was effectively inserting itself into any future negotiation about those facilities. If the United States or Israel ever considered striking Iranian nuclear sites, they would now have to calculate what Russian personnel or assets in the area might mean for such an operation. It created a layer of complexity, a deterrent of sorts, that Iran could not have manufactured on its own. But Russia was also positioning for something else entirely: natural resources. Iran sits on vast reserves of oil, gas, and strategic minerals. A destabilized Iran, or an Iran that survived this conflict and emerged deeply isolated from Western markets, would need partners. Russia understood that it could become the dominant economic partner for a post-conflict Iran, securing access to energy resources and trade corridors that would significantly strengthen Moscow's own geopolitical hand. This was not charity. This was strategy. NATO watches from Turkey. Further west, NATO air defense systems in Turkey had been placed on heightened alert. On the surface, this appeared to be a purely defensive posture, a precaution against the possibility that the conflict could spill into NATO territory through missile overflight, drone incursion, or deliberate provocation. But Turkey's position in this crisis was never straightforward. Turkey sits at the intersection of Europe, the Middle East, and Central Asia. It controls the Bosphorus Strait, the critical waterway connecting the Black Sea to the Mediterranean. It hosts NATO infrastructure while simultaneously maintaining its own independent relationships with Russia, Iran, and several Gulf states. Turkish officials had been carefully non-committal throughout the escalation, neither fully endorsing the coalition's approach nor breaking from it publicly. NATO's alert status in Turkey was a reminder that the conflict had already reached the edges of the European security architecture, and that one miscalculation could pull the alliance into something it was not prepared to manage. What hard assets already knew, through all of this, the gas halt, the funding crisis, every crisis has a point of no return, a moment where the decisions made in the next few hours determine not just the immediate outcome, but the shape of the world that follows. Military historians call it the inflection point. Economists call it the structural break. Ordinary people, watching from their homes and offices, simply call it the moment when everything changed. That moment was now, and the clock was running. The 48-hour decision window. Washington faced a choice that no administration wants to face, and no playbook fully prepares them for. If the strike on the USS Abraham Lincoln was confirmed, the United States would be under enormous domestic and international pressure to respond. Not responding, or responding too slowly, would send a signal to every adversary watching that American military assets could be targeted without immediate consequence. That signal, once sent, could not be unsent. It would be read in Pyongyang, in Moscow, in Beijing, and in every other capital where leaders were quietly calculating how far they could push before the cost became real. But responding aggressively carried its own catastrophic risks. A direct and forceful American retaliation against IRGC naval forces could trigger the very scenario that analysts had spent years warning about. Iran had already named its response: Dimona, Israeli nuclear infrastructure. The kind of target that, once struck, transforms a regional conflict into something the entire world would be forced to respond to, whether it wanted to or not. The 48-hour window was not simply about military strategy. It was about choosing between two versions of a dangerous future, and hoping that the version chosen did not become the one that ended the era of relative global stability that the world had quietly taken for granted since the Cold War. The Strait of Hormuz, the number that changes everything beneath the military drama, one geographic reality dominated every serious economic conversation happening behind closed doors. The Strait of Hormuz. This narrow waterway, at its tightest point barely 33 kilometers wide, is the passage through which approximately 20% of the world's entire oil supply flows every single day. Tankers carrying Saudi, Emirati, Kuwaiti, and Iraqi crude pass through it constantly. If Iran chose to close it, through mines, through naval blockade, through the threat of missile fire against tanker traffic, the impact on global energy markets would be mathematical, immediate, and severe. Oil prices would not simply rise. They would spike in ways that modern supply chains are not built to absorb. Every economy that runs on imported energy, which is most of them, would feel the pressure within days. Inflation, already a stubborn problem across the developed world, would accelerate. Central banks would face impossible choices between fighting price increases and supporting growth that was already slowing under the weight of uncertainty. And here's what made the Strait of Hormuz calculation especially dangerous in this moment. Iran did not need to close it permanently to achieve its strategic objectives. It only needed to threaten closure convincingly enough that insurance companies pulled coverage from tanker routes, that shipping companies rerouted their fleets, and that buyers began scrambling for alternative supply that did not yet exist in sufficient quantity. The threat alone was a weapon. The petrodollar under stress. There was a deeper economic story running beneath the surface of everything else, one that most news coverage was missing entirely. The petrodollar system, the arrangement through which global oil trade is conducted in US dollars, creating sustained international demand for American currency, was facing its most serious stress test in decades. Qatar halting gas production, Saudi Arabia watching carefully from the sidelines, Russia positioning itself as an alternative partner for Iranian energy resources, China, which had been quietly building alternative payment systems for oil trade for years, observing every development with strategic patience. Each of these elements, taken alone, was significant. Taken together, they formed a picture that serious economists and institutional investors were studying with growing alarm. The conflict was not just a military confrontation, it was a pressure test on the financial architecture that had underwritten American economic dominance since the 1970s. If that architecture cracked, even partially, the consequences would extend far beyond the region where the missiles had been fired. The new alliance map. Every major conflict rewrites the map of who stands with whom. This one was already doing exactly that. Faster than most observers had anticipated, Europe was fragmenting. Denmark, France, and Italy had already broken publicly from the coalition's position. Other European governments were watching those three nations carefully, calculating whether the political cost of continued support for the coalition outweighed the strategic cost of appearing to abandon a longtime ally. Russia had inserted itself into the Iranian equation in a way that would be very difficult to reverse. China had said little publicly, but was positioning its economic relationships for a post-conflict world in which Western influence over Middle Eastern energy had been weakened. North Korea had signaled its alignment clearly enough that any serious strategic assessment had to account for Pyongyang as an active variable rather than a distant spectator. And the Gulf states, Saudi Arabia, the UAE, Kuwait, were doing what they have always done in moments of maximum uncertainty. They were watching, waiting, preserving optionality. Because the nations that sit on the world's most valuable resources understand something that others sometimes forget. In the end, everyone needs what they have, and the side that wins the war still needs to buy oil the morning after. The strategic warning. For the business community watching these developments, for the entrepreneurs, the investors, the decision makers who understand that geopolitical shifts create both the most dangerous risks and the most significant opportunities of any generation. The message emerging from this crisis was not complicated. The world was repricing risk. Not just military risk, not just energy risk, but the foundational risk of assuming that the global systems built after World War II, the alliances, the trade routes, the reserve currency arrangements, the nuclear deterrence frameworks, would continue to function as they always had. They were under pressure in ways they had not been for decades. And the window for positioning ahead of that repricing